Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joe Tigay, Managing Director with Equity Armor Investments. Joe, it's great to see you as always. Welcome back to Trade Talks. And September is living up to its reputation of being a historically volatile month. And we started to see that in some of the trading to kick off the month.
Yeah, and it's been a weak start to the week, obviously. We had the holiday making it a shortened week. It's been a light trading week. We have the Jewish holiday on top of that. And they also say sell Rosh Hashanah, buy Yom Kippur. Maybe we got a little bit of that going on. But generally, people looking at the summer months, they had vacations. Now they're back off of vacation. Maybe it's time to just look at their portfolio, dump some of the losers out of their portfolio, and then kind of use this time in September to see what's good for the fourth quarter, what's underpriced, what's a good value going forward, and try to get the winners for the last part of the year.
And Joe, you also noted that the infrastructure package is really in play and the market's trying to price out what sectors are going to benefit from it. What are you looking at there?
Yeah, so right now people are saying, okay, the taper talk is really putting a headwind on the market. Well, before we knew the taper was coming, but we expected the taper just to be smoothly replaced, get a little fiscal policy replaced with a little monetary policy with the infrastructure package. It was expected to be $3.5 trillion. It might still be $3.5 trillion, but right now there's some back and forth going on, and as there usually is when a bill gets passed, but there might be a little uncertainty as to the timing of that. And of course, this reconciliation bill is also expected to have the debt ceiling raised, so that could add an added layer of volatility. We all remember the fiscal cliff and what happened before, so whether or not that's going to cause some problems going forward is anybody's guess.
Yep. Oh, there's your trading buddy. I have one of those too. So Joe, not only do traders have to deal with monetary policy, and to your point, now they're dealing with fiscal policy. What are your thoughts around interest rates and inflation? It seemed to be that the Treasury market was signaling, a little bit of pause, a little bit of question there when it comes to that.
Yeah, they have been signaling that, and they started that maybe a month ago, their last meeting, and now that they've been able to get some asset price appreciation, pardon me, while people have kind of accepted that. And so now we're going to be at the next meeting, and we're going to say it's already priced in. I think that's what the Fed wants to do, set the expectations, make sure that nobody is surprised. And if the market continues to go higher, then they've really done a great job.
All right. And of course, Joe, we always talk about EAVOL, right? And that type of volatility overlay within that product is one of those things that you want to think about in your portfolio as we're setting up for some potential volatility here.
I talk to advisors all the time, and the one thing that they all agree on is that asset valuations are very high. Now, the one thing that is a disagreement as to what happens next. Now, of course, there are three possibilities. Prices can correct and valuations can come in that way. Prices, of course, can still go higher. There's no question about that. And the third possibility is that we have a consolidation period. And I think all possibilities are equally likely. And that's why I invest the way that I do. I have protection of the downside with my volatility hedge, and I still have the upside appreciation possibility with my trade.
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.